Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast. This is your roundup of companies making news on Wall Street and beyond, harnessing the power of Bloomberg data.
Let's take a look now at some stocks on the move today. We are joined now by Denitsa Sekova, Bloomberg Cross Asset Reporter. Denitsa, it's hard to talk about these stocks without talking about Nike.
Let's start with Nike. I feel as though we've talked a lot about them in the last few months, and most of it has been positive stuff. This time we're actually seeing their big comeback being threatened. We're seeing a lot of issues in terms of clearing out old inventory, growing trade war, and of course we've constantly talked about weakening consumer. So all of these forces have pushed Nike down 9%. And if you look at the year-to-date loss, we're looking at 13%. So it's a pretty rough start of the year. Of course, this comes after a big turnaround effort. We saw their a new chief executive officer, Elliot Hill, coming out of retirement to work on this. He's a long-time Nike employee. That has a great reputation, and there have been so many new initiatives. We were talking about the Skims partnership. We were talking about the Super Bowl commercial, and all of those things indeed brought optimism and help. But it seems like when it comes to earnings, investors are still not impressed by the company's turnaround and are waiting to see actual number. So, of course, weakening consumer and fallout from the escalating trade war are really complicating this.
All right, FedEx, also awful.
Yes, again, going back to the weakening consumer trade war, I feel as though that's something that comes up on all earnings reports, and FedEx is the latest company to sound alarm on that, especially the escalating trade war. Shares tumbled more than 11%. The company lowered its full-year guidance for third consecutive quarter. They're citing inflation, uncertain demand for shipments. And if you look at the chart, year-to-date loss is more than 20%. So again, another company that's having a very rough start of the year. Adjusted earnings are projected in the range of $18 to $18.60, below the average of $18.95. That's what analysts estimated. The company has obviously a big exposure to a lot of things in the global economy. So you can imagine trade war is particularly difficult to navigate for a company like this. And they even said that their outlook assumes the global economic, political, and trade environment doesn't worsen any further. Okay. And we obviously don't have a lot of guarantee on that. So not too much optimism on the stock at the moment.
What about Luminar?
Yes, I wanted to bring some good news in the end. The company is seeing a big spike today, more than 20%. The maker of sensor of autonomous vehicles, obviously a very niche thing that's trendy and doing very well. It's posted 4-quarter earnings that topped estimate, and company is up 44% year to date. Really good start of the year, considering how volatile markets have been. They included guidance for revenue growth that's as much as 20%. We saw that the company is still feeling the pressure because it has exports from Mexico, which obviously are impacted by the trade war. But we're seeing optimism among analysts. Deutsche Bank upgraded their target and are implying 11% increase from here. The company actually develops that technology that helps self-driving cars and especially when they're turning and parking, and it helps the autonomy to really provide that reliable situational awareness. So it's a very important thing. They work with Mercedes, Volvo, and all those big brands. So they're doing well.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.